Live from Singapore, this is Inside with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Metal tariffs from the U.S. set to come into effect in an hour. President Trump dialing back his threat to double duties on Canadian steel and aluminum to 50%. Markets left dazed and confused by Trump's tariff flip-flops, even as he downplays the risk of a recession in the U.S. We'll be looking at the probability of that with Barclays Global Chairman of Research. And Ukraine accepts a temporary U.S.-brokered ceasefire plan in return for military aid and intelligence. INSEAD will be with us to assess the progress of truce talks so far. We're counting down to President Trump's 25% steel and aluminum tariffs. They're due to come into effect just an hour from now. The White House says levies on Canada and all other trading partners will go into force at midnight Eastern Time. However, Trump's tariff roller coaster saw him dial back his latest trade war threat to double duties on Canadian steel and aluminum to 50%. And on the economy, too, Trump walked back talk of an economic recession he had himself fueled by not ruling out the possibility in a recent interview.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
But just hours after he said that, Trump told top executives gathered at the meeting of the Business Roundtable to brace for more tariffs, saying rates could go even higher. The president says increased levies will push more companies to relocate their operations to the U.S.
But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades. And they were doing the same thing. But I think we'll do it better. And I think we have a bigger advantage because we really are the piggy bank. They weren't.
Well, not surprising, all this has left investors dazed as they try to catch up. Avril Hong joins us now to help us put everything in perspective, if that is possible. Avril, I mean, we know currently Asia tracking the U.S. rebound. Do traders really think this is sustainable?
Well, I'm going to try and put things into perspective for you, but as you alluded to, that's quite difficult amid the vol, right? Whether this can be sustained, I mean, you look at how the tariffs were doubled down on by Trump, then walked back. We have Australia now, it seems unlikely to get any exemption. So even though we saw a late session rebound in U.S. stocks and futures are pointing higher, Asia stocks tracking that, save for Australia, it looks quite difficult to make the case for a sustained rebound from here on out. Don't forget, for the S&P 500, we're still not far from correction territory, about 9.3% down from the most recent peak. Flip the board and take a look at this chart from Garfield Reynolds of the MLive team that shows you the S&P 500 against a gauge of volatility across assets. It has actually risen to levels that in the past year actually signaled substantial declines in the US benchmark. Not only that, it's also at the highest level since August. Remember that yen carry trade unwind, and back then we kind of had the BOJ and the Fed to soothe nerves. This time around, I think the concern among investors goes much deeper, and there are these concerns about fundamental triggers. Flip the board again. All this is ramping up traders' bets of Fed rate cuts, and we're actually seeing the premium on bullish bets on the two-year note hitting the highest level since September. Now, for a sustained rebound, if that is possible, I think investors want to see less policy uncertainty and better U.S. economic data, House.
That's right. The economy now in question. Avril Hong, thank you so much for that. Well, let's get to Ajay Rajadhyaksha, Global Chairman of Research at Barclays. Ajay, good to have you with us. Those gyrations in the market we're seeing right now is a reflection of the concerns about the U.S. economy. From your own perspective, is the U.S. economy in trouble at all?
It's starting to get there, and it's getting there in three or four different ways all at once. First, even away from tariffs, let's not forget there is an immigration crackdown that we always thought would knock off anywhere between 30 to 50 basis points of growth. Then you have the clear indication that consumers in the fourth quarter of last year and corporates pulled forward goods spending because they worried that tariffs were coming. And then the uncertainty of the tariffs and the actual tariffs are two separate things. I mean, look at last week, right? We started on Tuesday with 25% tariffs on Mexico and Canada. Wednesday, autos are carved out. Thursday, all USMCA compliant goods are carved out, which we think is pretty much everything. And then Friday, the president says, but reciprocal tariffs could come as early as that day. If you are a small business or even a large business, right, you have a supplier and or a customer in Mexico and or Canada, it's very, very likely. And right now, you just don't know what to do. That uncertainty is a big, big deal.
Data aside, Ajay, you say it is about labor dynamics. I mean, how are you looking at that? How are you reading into that? Because when you take a look at job openings, not looking too bad, right?
So far, they are not. The thing, though, is that the number of jobs produced in the United States are a function of two things, not just demand for workers, but also supply of workers. Now, look, we are not as aging a country as most parts of Europe, but we are absent immigration and aging country. For the last 3 years, we had this massive wave of workers coming into the United States that's going to completely shut down at this point. And that delta, that change, will be jarring, and that will lead to a job slowdown by itself. But separately, my big fear is if the consumer starts to pull back, then companies will stop hiring. And we might not be all the way there yet, but if the administration, if policy uncertainty continues on this path, I am pretty worried.
Consumer confidence has been dented, and we also know that the small businesses are worried. You know, there are murmurings about a possibility of a recession. How are you assessing that? If there is a probability of that happening, I mean, how high is that?
So Larry Summers came out today and said it was as high as 50%. I think that is an outright recession. I think is probably still lower probability than that. If I had to guess a number, I would say perhaps a third, which is pretty large. This is not the number I would have told you 2.5, 3 months ago when this administration was elected. I mean, the US seemed to be in pretty good shape. Here's the Achilles heel for the US economy. The household savings rate is extraordinarily low. Now, we know why it's low, because there have been large amounts of excess savings. Wealth has gone up massively over the last 3 years. So consumers have been very comfortable spending what they earn. But if that savings rate starts to creep up, even back to more normal levels, remember, it is very low relative to normal levels right now. It starts to creep up. Say it goes up a percentage point, it would still be lower than it was in 2019. And it starts to creep up because there is this constant drumbeat of job cuts on the government side, tariff policy uncertainty, prices going higher, the equity market pulling back, all of these things start to come together. You could knock off 70 to 80 basis points of US GDP growth for every 1% increase in the US savings rate. Yeah.
So not surprising, we're seeing the recent sell-off. We have the S&P now in correction territory. I'm just wondering, is that reflecting enough the concerns you're telling us right now?
It is not. So right now at 5,600 on the S&P, we are at roughly 20 times 12-month forward earnings. And if we actually go into a recession, if the odds of that go up, we are not remotely priced for that. Now, I'm not saying that is going to happen. If you ask me to pick a side, I still think last year, the US economy, Q4 over Q4 in 2024, grew at 2.5%. I would probably make a market at something close to 1%, maybe 1.5% in a good environment if tariff policy uncertainty suddenly goes away. But if we continue on this path, I mean, Mexico and Canada, right? Detroit and Ontario have been tied at the hip for 80 years. A car part goes back and forth across the border 6 times, ends up in a US-made car. If we go ahead with 25% tariffs on Canadian autos, you will have car plants in Michigan start to get affected, start to have to shut down. We are not priced for that in the equity markets now.
How do you think the Fed is looking at it? Because the market's pricing in 80 basis point cut by the end of the year. The first cut's coming in June. You know, if those data come in weaker than expected in the coming months, I mean, we can expect more cuts by the Fed, no?
Yeah, but the Fed is in a very awkward place right now because tariffs will, no matter how much you might try to deflect it, they will push up the price level at least for 2025. If we do impose 25% tariffs on Mexico, Canada, Europe, which is what the president has talked about, there's already 30% on China. Even with the dollar taking some of the brunt, prices will go up. And we are not anywhere close to 2% already. So if you start to see prices go up, if core inflation by the end of the year is still at 3%, it becomes very awkward for the Fed to cut aggressively. Now, there's one caveat. If we start to see net job losses, I think the Fed will move quickly. But by that point, by the point that we start to see the first negative job print, we will probably already be in a recession and the Fed will be playing catch up.
How critical is this February inflation data?
I would tell you that this week, the inflation data is less important than the retail sales number. It is important, don't get me wrong. You know, if you get a 0.4, for example, tomorrow consensus is at 0.3, and you get a full 0.4, that it's not rounded, I think the equity sell-off that we've really had for days and days now will continue to resume because the fear will be that the Fed can't come to the rescue quickly enough. But even if you get a normal number, which I think is likely, if you get a weak retail sales print on Friday, I would take more, I think the markets too, would take more signals from that the consumer is withdrawing far more quickly than any of us thought possible 2.5 months ago.
Ajay, how should investors be looking at this? Is U.S. exceptionalism over? We had conversations with our guest just yesterday, Ed Yadani, saying it is still intact. Max 7 is still in play. Buy the dip. Is that the way to look at it?
The U.S. big tech is an absolute miracle. I will lead with that. There's no question about it. But for the next, everything's a function of price, right? There is a price at which something is attractive, no matter how fundamentally solid a company is. There's a price at which something is not attractive. I would tell you that the gap has definitely reduced sharply, and the market is telling you that, right? This year, U.S. equities are down, European equities are up for the year. HSCI Tech has had a big bounce. The rest of the world is starting to play a little bit of catch-up. Keep in mind, right, we are talking about an economy that is about 20 to 25% of world GDP, but accounts for 65 to 70% of global equity capitalization. If that 65 goes down to 60, it is still exceptional, just a little less than before.
And of course, people are reassessing, resetting the targets. Now Goldman coming out to say that, its target for the S&P for the year end has been cut to, let me just get the numbers right, 6,200 versus 6,500 before. We'll be seeing more of this kind of reassessment, won't we, Ajay?
Almost certainly. And especially if the passage of time will matter. And equity analysts will take their cues from two things. One is, if the administration seems to set to continue on this path, if we actually go ahead with 25% tariffs on Mexico and Canada on April 2nd, you just watch. Those targets will come down even further, even for those who have already pulled them down. But you're absolutely right. This is just the start. I think for the near term, at least, unless something drastically changes in the approach that policymakers have, you're going to have equity end-of-year targets absolutely come down.
Right. And it's no coincidence that we're seeing a rally in Chinese stocks, tech, China stocks in particular. Ajay, I'm just wondering how you're assessing that, because a lot of people say that if the rally wants to continue, it needs foreign funds to be in this rally as well.
At these levels of valuations, I don't think so. I mean, Chinese equities, especially China tech, has benefited from two or three things. One is there have been exceptional successes. DeepSeek was an exceptional success. It showed that not having access to the latest chips, right, you could find your way around it. That's number one. Number two is the Chinese government's very public embrace of private tech firms that we have seen in the last 2 months or so. Remember, 3 years ago, that was very much not the case. And number three is that the starting point on valuations is still pretty cheap. China equities, you notice, have been very uncorrelated with what happens in the US. European equities have beta to the US, some beta, but Chinese equities don't. I think this rally still probably has a little bit more room to run, almost regardless of what is happening in the largest economy in the world.
Of course, linked to this rally is the AI play. And some say when it comes to AI, there is a rotation away from NVIDIA and AI chips and now into AI infrastructure, the hardware, cloud. I mean, how are you assessing it? And how should investors be playing in this space now?
I think you're absolutely right. Part of what is happening here is markets are questioning whether the 80% gross margins can continue for 3 quarters out, 4 quarters out. Nothing's changed for the next couple of quarters. We all know that. But beyond that, number one. Number two is because of the DeepSeek success, right? You start to wonder if training costs, not just inference, starts to come down. But the biggest thing happening is we are decisively moving, I think, from the picks and shovels phase of AI, where the focus was on building out, on coming up with a better training model over and over and over, to the implementation phase, to finding out use cases in one industry and another and another. And that, I think, is where the big successes will come from. I'll give you a very, very old example. The biggest winner from refrigeration was arguably not any refrigeration company. It was not Kelvinator. It was a company that we all know extremely well, Coca-Cola, which is not what you would have thought when that technology came out. So that implementation phase, I think, is where we are moving to, and that's where the new winners will come from.
Is this the year, Ajay, that China outperforms the US?
I think it's not a high bar right now. I mean, given how the US has started the year and how China has started the year, China at the end of the year, even if it outperforms the US, which I think is probably a correct statement, will still, from a valuation standpoint, be very cheap relative to where the US is. I think you're right. I think this is probably the year.
Ajay, just one final question, and it is a question that I've been asking my guests. Now, what's the one asset you need to hold in 2025? Is it gold?
Gold's done incredibly well. And if the risks of a central bank easing cycle pick up, which I think they will, I think gold is going to continue to do well. It seems like a good place to hide. But I honestly, your markets, I like them too. I think China tech for the near term is actually a reasonable place to park your money while you wait for things that are far more affected by trade globally to calm down.
It is hard to hide these days. Ajay, thank you so much for your time today. It's such a pleasure. Ajay Rajadhyaksha, Global Chairman of Research at Barclays. Now, still ahead this hour, after intense talks stretching 8 hours, U.S. and Ukrainian negotiators iron out a deal which now puts the ball in Putin's court. We'll discuss the details of the agreement just ahead. Keep it here with us. This is Bloomberg. As we brace for the 25% tariffs on aluminum and steel, one U.S. trading partner who thought it dodged the bullet is disappointed. President Trump has ruled out a levy exemption on Australian steel and aluminum imports. That's despite a lobbying campaign by Prime Minister Anthony Albanese's government.
No country, regardless of its relationship with the United States, has been granted an exemption. Such a decision by the Trump administration is entirely unjustified. Tariffs and escalating trade tensions are a form of economic self-harm. This is why Australia will not be imposing reciprocal tariffs on the United States. Such a course of action would only push up prices.
For more, let's bring in Bloomberg's Paul Allen. And Paul, we heard Albanese saying unjustified, but it's not the end for Australia. It will continue, perhaps, to lobby for an exemption.
Well, that's the plan, is to keep on pushing for an exemption. And Australia got an exemption before, back in 2018, during the last Trump administration. The then Prime Minister, Malcolm Turnbull, won an exemption, although Malcolm Turnbull was on Bloomberg TV earlier this week and said, well, good luck getting one this time around. And, yeah, so it's turned out to be no exemption. But it does get a little bit unusual. Trump's press secretary, Caroline Leavitt, was asked why Australia didn't get an exemption, and she said, well, it's America First steel. If you want to move your steel manufacturers here, you're most welcome to do so. Well, here's the funny thing, Australia's only got one listed steel maker, and that's BlueScope, and it does produce steel in the United States. It's, in fact, the US's fifth largest steel producer. Produced 3 million tonnes in the US last year and employs 4,000 workers. The plant is in Ohio. BlueScope also exported 300,000 tonnes of steel to the US last year, but it exported it to California because it's cheaper to ship the steel from Australia than it is to truck it from Ohio over the Rockies. So that's one unusual thing. And in terms of aluminium, the Rio Tinto CEO Jacob Stahlhelm said earlier this year that when the Ukraine war broke out, the US actually asked Australia to ship more aluminium to the United States to compensate for the lost product from Russian sanctions. So it does beg the question, why no exemption? And this is probably why the government's continuing to push.
Any news about retaliation? Might Australia retaliate? We've seen the likes of Canada, Mexico, China all talking about retaliation.
Well, you heard Anthony Albanese, the Prime Minister, say a moment ago that there won't be any reprisals. We also heard from the opposition leader, Peter Dutton, just a few minutes ago. He was also giving no indication that there would be any reprisals under a potential government led by him. It's also interesting that we are going to have an election here in Australia sometime in May. We don't have the date yet. And while Peter Dutton has accused the Prime Minister of not standing up for Australia, Dutton says he would have sought an exemption much more effectively. He called the Australian Prime Minister weak. Again, there was no language along the lines of counter tariffs or any reprisals there either. So it's a little bit different to the situation in Canada, where both the leaders of the main two parties there are competing to see how tough each can be on the US. The tone here in Australia far more conciliatory at the moment.
We know that the US and Australia are longtime allies. I'm just wondering whether that could be trickle-down effect. I mean, from trade tensions to security tensions, perhaps.
Well, we'll have to wait and see. I mean, there is, of course, the AUKUS pact for Australia to receive nuclear submarines from the United States, that partnership including Britain as well. That gets asked about fairly frequently, but there's certainly no indication that there could be any difficulties around that at the moment, at least. Anthony Albanese, though, did say that this is against the spirit of our two nations' enduring friendship. It's fundamentally at odds with the benefits that our partnership has delivered for more than 70 years. So really leaning into the long history between the two countries there. But again, no hint of reprisals. But I just want to put this into context for you as well. Last year, $400 million worth of steel exported from Australia to the US, $276 million worth of aluminium exports.
Right.
This is a tiny, tiny amount in the context of Australia's exports.
We thank you. This is Bloomberg. Welcome back. You're watching INSEAD. Ukraine has accepted a U.S. proposal for a 30-day truce with Russia as part of a deal to lift the freeze on military aid and intelligence. Washington will now take the deal to Moscow.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
The agreement was reached after 8 hours of intense talks with Saudi Arabia. For more on what we heard from the meetings in Jeddah, we're joined by from Dubai, by Bloomberg Horizons anchor Jumana Basachi. Jumana, put this in perspective for us. What exactly did Ukraine and the U.S. walk away with in those talks in Jeddah?
Yeah, well, it looks like we actually did get that deal in the desert, or a breakthrough in Jeddah, as some people are calling it. What we know about what was agreed to is Ukraine at least one part of the two major parties involved in this war, have agreed to the terms of a 30-day ceasefire, subject to both parties, of course, agreeing to those terms, with the view that that ceasefire could be extended into a permanent ceasefire as well. Ukraine have also reportedly clarified what concessions they are willing to make in order to move towards a long-term peace agreement. And then, crucially, the U.S. have now said that they will resume the military support and the supply of ammunition alongside that intelligence sharing that had been paused in the last week after that very testy Oval Office meeting that took place between President Trump and President Zelensky. And then finally, the U.S. and Ukrainian sides both agreed to make a pledge to work towards concluding that minerals agreement that had been in the works over the last couple of weeks. So yes, significant progress has been made, and a big turnaround, I would say, Haslinda, since that very testy Oval Office meeting. And at the time, a few people thought that maybe just 10 days later, we'd been in a situation where the U.S. and Ukraine officials had met in person and come to an agreement on the ceasefire proposal. Now, President Zelensky did take to Telegram yesterday saying that they are in support, in favor of peace. But of course, the ball is very much now in Russia's court. And we even heard from the European Commission President, Ursula von der Leyen, yesterday. And she was saying that this proposal has the full support of Europe as well, but now onto Russia. And we have to see how they are going to respond to the deal.
As you said, the ball in Russia's court. What are the next steps with Russia?
Well, we know that U.S. officials are now going to be heading to Moscow to put the deal to Russian officials. In fact, the Middle East envoy, Steve Witkoff, according to our own reporting, is also headed to Moscow over the next couple of days. It is not so straightforward. First of all, it's coming on the heels of a very intense drone attack from Ukraine into parts of Russia overnight, the largest drone attack since the war began. Russia are in the midst of an attack in the Kursk region. They may not want to stop midway through that attack and may look to buy more time so that they can capture more territory. In addition, the history here is important because back in 2014, 2015, the two sides did come to ceasefire agreements around Crimea, but there were regular violations. And because of those violations, it sort of led to that simmering conflict that later then erupted in 2022. So there's no guarantee that both parties will stick to the terms of the ceasefire arrangement. In addition to that, Russia have long said that they have certain conditions that should be met in order them to sign on to the long-term peace agreement. And one of those conditions is no presence of peacekeeping troops within Ukraine. And of course, this is something that both the UK and France have endorsed. So still a lot of daylight, I would say, between how we progress from a 30-day temporary truce into a long-term peace agreement. But the motion is in play right now.
Do you want to talk to us about Saudi Arabia's role in all of this?
Yeah, I mean, this is pretty interesting as well, Haslinda. The fact that the agreement, the breakthrough happened in Jeddah, the coastal city in Saudi Arabia, also is a reflection of how much status Saudi Arabia has gained just in the last 5-6 years on the global scale. They have really worked on presenting this image of a middleman, of a power broker when it comes to some of these global discussions. And by the way, it's not just vis-a-vis Ukraine and Russia. They've also played an active role in Gaza, the discussions around the future of Gaza. Remember when Trump posited the Riviera, the Riviera of the Middle East idea, it was then Saudi Arabia who were quick to bring together some of the key Arab voices from the region in order to come up with a counter-proposal. And so this is part and parcel of the image and also the clout that Saudi Arabia want to have on a global stage with some of these intense diplomatic efforts. And I would say from their perspective, it is a coup that they got the Ukrainian and U.S. delegations to meet alongside one another and to come through with this breakthrough. We don't know whether Russia are going to sign on for it, but certainly it is a very positive step in the right direction.
Jumana, great insights. Thank you so much for that. Bloomberg's Horizons Middle East and Africa anchor, Jumana Bassachi. Now let's get insights from our next guest who believes Ukraine is playing for time, as is Russia. Pushan Dutt is Professor of Economics and Political Science at INSEAD. Good to have you with us. Both playing for time. Why do you say that?
Because both of them are suffering economically and in terms of the cost on the battlefield. So if we just step back and think about what happened when Russia first invaded, most analysts thought that it would be a walkover. They took about 19.3% of Ukraine's territory initially. Today they hold 19.6%. So they've actually gained very little in the last 3 years. At the same time, the sanctions have slowly started to bite. And just look at what Russia is doing. They need drones from Iran, they need manpower from Korea, and they need machinery and supplies from China. So Russia's economy is hurting. High inflation, their currency is depreciating. And of course, Ukraine is paying a really high price in terms of both blood and treasure, right? So what is happening right now is that Trump seems to be very closely aligned to Russia's demands. So therefore, it's the Europeans who will have to step up. What the Ukrainians bought for Europe was time, 3 years, but they sort of deterred it away. They didn't do anything. Okay, they just hemmed and hawed, and now they're waking up and they're pivoting to rearming themselves, getting their military-industrial complex online, but that's going to take 2 to 3 years, right? So therefore, they again need Ukraine to sort of buy time. So therefore, I see that whatever ceasefire happens is going to essentially buy time for both of the parties, and then they'll be off to an arms race.
So if they're buying time, what do you make of what people are saying, that this is a remarkable breakthrough? It isn't that?
I think it isn't. No, I think that's wrong, because essentially what I expect is that Russia is going to demand greater and greater concessions, okay, because they're sort of very aligned with what Trump has been saying. So for instance, Russia does not believe that Ukraine should exist as a country, okay, and that Ukraine actually started the conflict. And that's what Trump has also said, which means that there is very little daylight between Trump's position and Russia's position. So as a result, I think that Russia is in the driving seat in these negotiations, and what they're going to do is they're going to steadily escalate their demands, okay, till it becomes really, really difficult for both the Ukrainians and the Europeans to swallow. I think the Europeans are sort of the only hope for the Ukrainians. So we were talking about a peacekeeping force, right? So Zelensky wants 200,000 troops on the ground. That is more than twice the size of the UK army. So it's the Europeans actually don't have. They can provide about maximum 5 to 10% of those troops. And what Ukraine really needs from the US is intelligence sharing. And what it needs is the trickle of arms that has been coming through. So basically, they are biding for time, so the Europeans can step up.
We talk about those boots on the ground. I mean, we know that Russia is already pushing back on the possibility of European boots on the ground. Might we be looking at perhaps Chinese boots on the ground? When one of our colleagues put this question to the foreign minister of China, he didn't push back on the idea.
So I don't know so much about China, but if I were Russia, I would want very ineffective boots on the ground, because Russia has, just as it was mentioned, has had a history of violating these ceasefires, both the Minsk agreements, which they tore up. So therefore, the problem that Ukraine faces is that that they need a security guarantee, but given Russia's history, this is not viable, right? The Russians will not agree maybe to the European boots on the ground, so therefore they will want, but they will still, whatever boots on the ground are, they're going to try to push back and violate it slowly but surely, which means that they will want something like a United Nations boots on the ground. Maybe China comes in, but China and maybe Russia finds that acceptable. But again, if I look at the history between Russia and China, it's not a pleasant history. Like, they've had their own territorial conflicts, and Russia is by far the more junior partner between China and Russia. So even from Russia's perspective, seeing a bigger role for China in Europe, I think will be unpalatable.
How will this play out? Because right now, everybody's saying that the ball is firmly in Russia's court. How will Russia respond, and where do we go from here?
So Russia needs time. So therefore, it'll actually keep negotiating over this, and it'll try to delay the negotiation process as much as possible. And Trump is going to be aligned with this. Okay, so I think it's important to understand the worldviews of Trump, Putin, and all of these actors on the stage. So Putin essentially wants a multipolar global order where, Russia is dominant in Europe, China is dominant in Asia, and the US is either isolationist or dominates the Americas. This happens to be also Trump's worldview, okay? So therefore, they are sort of aligned with this. And because they are sort of aligned with this, in a sense, when he said that Ukraine, you hold no cards, this is true. The Ukrainians don't have any cards. The only one that they can sort of rely on are the Europeans, but that's going to take about 3 to 4 years. So the Ukrainians will have to accept a bad deal, okay? And how bad the deal will be, I think, is secondary to the notion about how credible the deal is. And given the past history, I don't think that that's going to be very credible. But the Ukrainians really need the intelligence sharing, because that's what has allowed them to fight the mighty Russian military to a standstill.
What can the Europeans do? Yes, they're committed to increase the defense spending, talking about an $800 billion plan. What else can they do to ensure that they don't see a mightier Russia?
So the first thing is they should have a very clear view of the world. Okay, so they've deterred for like 3 years, right? They thought that they could actually, flatter Trump and then the world would go on as normal. At least they've realized that that's no longer the case. The French defense minister just said that, the biggest threat is not Russia, but the unreliability of the Americans. So at least they've sort of woken up to this. Okay, now then you have to go a little bit country by country. Germany is the one which has made actually the most credible commitments. France still talks a good talk, but has not made any concrete commitments. But what this has done is it has unified Europe. More importantly, it has actually unified, the left wing and the right wing in many of these European countries. So therefore, they are in a position, and what they've started thinking about is getting rid of the debt breaks, increasing the defense spending or keeping it out of the debt shackles that they have. So I expect all of this to happen. The other thing is that Europe is actually an industrial powerhouse, right? Their industries are suffering because of competition from China, but they can actually pivot because they have the skills, they have the capital, they have the technology. So therefore, the Europeans are going to pivot. And it'll also be very interesting. I think they're going to stop buying American arms, because, what the Americans did just now is they turned off some of the arms that were given to the Ukrainians. Now, if I'm a European, I don't want an American weapon which can be turned off at the whim of Donald Trump. So therefore, they're going to actually pivot, and this will be a fiscal boost, and you can see the stock market reacting to it, because the stock markets, I think, are wiser than most of us.
We've been talking about how this is possibly the start of the end of the New World Order as we know it. Would the Europeans be playing a bigger role in the coming years?
I think they have to, okay, because in this new world order, the U.S. has become more isolationist and paradoxically also imperialistic, right? In the sense that they want Canada to be the 51st state. Actually, I shouldn't say the U.S. I should just say Donald Trump. So they want Canada to be the 51st state. They want Greenland. They want to rename places. They're fighting with their allies. So the U.S. has completely pivoted. So therefore, I think this has sort of created a vacuum. Putin's worldview always has been that the West does not have the stomach to actually expend either treasury or blood in maintaining the world order. And he's proven to be right, because the Europeans deterred, the Americans pivoted. So now I think if the current order survives, it has to be the Europeans.
How are you trying to make sense, and I use the word trying to because it's impossible to actually make sense of what Trump is really after? I mean, he's trying to establish a new relationship with Russia, also a new relationship with China. How are you reading all of that, and how the power dynamics will play from here?
So this is where I play an armchair psychologist, like all of us have to do. But Trump, I know he's very volatile, right? Just look at tariffs, for instance, right? On again, off again. But there are certain consistent attributes that he has, okay? The one thing is that he's at his heart an isolationist. What does this mean? That he's not going to commit, U.S. troops and treasure. The second thing he thinks in terms of dominance and dominated. So in the Ukraine-Russia example, therefore, he thinks that, Ukraine is weak, so therefore they should be dominated, whereas to Russia he will grant a lot of concessions because he thinks it's their sort of the dominant power. The third thing that he really likes is adulation and praise, which means that he will really push for a ceasefire and hope that that will win him the Nobel Prize. I don't think it will, But, you know, and because I think that whatever deal comes is not going to be stable or last for long periods of time, just by looking at these things historically. But that's that's where the U.S. is headed towards.
The thing is, people say Trump does what is good for Trump himself. Do you agree with that? Is this about him? Or is this about rebuilding? Is it about making the U.S. great again or not?
Is it about making the U.S. great again? That is a definite no, like a hard no, right? You know, the current global international order, whether it's in trade, whether it's in international relations, which the U.S. built almost over the last 80 years, has been really good for the U.S., right? You know, so for instance, on tariffs, he's saying, you know, we are taking short-term pain for long-term gain, but I think he's taking short-term pain for long-term pain. And he's sort of getting rid of the key competitive advantage that the U.S. has, which China doesn't, which is its alliance structure, right? Every country right now is thinking that, you know, the U.S. security umbrella doesn't hold, that, you know, they are contemplating getting nuclear weapons, you know, whether this is in South Korea, whether this is Poland, they're all thinking about this. So therefore, I think what he's going to do is not going to be good for the U.S. Now, is it now only about Trump's personal gain? And I think there's been a shift there. He wants to leave his mark on history, okay? So that's why he wants the Nobel Prize. He wants to actually completely transform the way of thinking within the U.S. and also across the world.
And for countries like Singapore, like the Philippines, like the rest of Asia, how should they be looking at the dynamics, the changing dynamics of relations with the U.S.?
So there's a saying which says the strong will do what they can and the weak must do what they must. So I think that's a
realignment of security relations?
Yes. So a realignment of security relations, you know, now, you know, being closer to China, being closer to the Europeans, because the U.S. has become an unreliable partner. China seems to be more reliable a partner as well. You know, thinking about, you know, other emerging markets, bigger ones like Brazil, Turkey, India, etc. Singapore actually did a good thing after it became independent. It decided to become, you know, a poisonous shrimp, which is, you know, it has one of the highest defense expenditures in the world, right after Israel as a fraction of government spending. And for a long time, I thought that that was a bit absurd because they never faced war. But in retrospect, that turned out to be actually a really good this thing. And now Taiwan is thinking we want to become the iron porcupine. You know, the Ukrainians are sort of doing the same. So maybe, you know, other countries should look at what Singapore is doing because it seems to get these long-term bets right.
All about reassessing the situation. Pushan, thanks so much for your time today. Pushan Dutt of INSEAD. Well, India's been trading for about 2 minutes now. Let's do a check on how the stocks there are doing. In the first few minutes of trade, we have gains across Asia pretty much, and India joining that, I guess, marginal rally. The Sensex up by 0.3%. Gains for the rest of the benchmark. The Nifty Bank Index up by 0.4%. We're taking an eye on the Indian rupee, trading at 87.20 to 88 at this point in time, flat versus the USD. Now, one stock we're tracking is Ambani, of course. Ambani's Jio in a pact for Starlink internet services in India. And on the back of that, we're seeing Reliance Industries currently up by 0.9%. The other telecom plays pretty much a mixed bag today. Idea Cellular in negative territory, down 0.4%. Again, Ambani's Jio is in a pact for Starlink internet services in India. Of course, that's pretty much linked to the man himself, Elon Musk, the man who's been in headlines for a very long time. Well, still to come. Former Philippine President Rodrigo Duterte set to arrive at The Hague after his dramatic arrest in Manila on Tuesday. We'll have the very latest next. Keep it here with us. This is Bloomberg. Former Philippine President Rodrigo Duterte is set to face the International Criminal Court over his drug war that killed thousands. Duterte's arrest has also raised the stakes in the clash for control over the Philippines. Bloomberg's Manila Bureau Chief Manolo Serapio joins us now. Manny, take us through what's the very latest on Duterte.
So basically, he is en route to the Netherlands today. He just made a stop over in Dubai this morning, time in Manila. and then he's expected to arrive in the Netherlands afternoon Manila time. So what we expect is that he is to be under the custody of the ICC, the International Criminal Court, and then preliminary hearing should be set, although the ICC said last night that they cannot divulge any further details on that. So this follows the arrest of the former leader yesterday morning in Manila upon his return from Hong Kong, where he addressed thousands of his supporters. He said he was ready to be jailed over the weekend, and then came this arrest because the Philippine government was cooperating with the Interpol. But I guess it still came as a shock to many that everything came so swiftly, because the ICC has not confirmed anything prior to the arrest yesterday in Manila.
Manny, how might this play out? Is there a sense of what we might see? I mean, he joins a rare club of ex-leaders arrested.
Yes. Specifically, he is the first former Asian leader to be served an arrest warrant for a legal case with the ICC. He joins that rare club, and we'll see. Our expectation is that he's preparing his legal team right now to put up his defense when the International Criminal Court starts the trials. And then his daughter, the vice president, actually flew to boarded a plane this morning from Manila to possibly join him and provide some support to her father.
Right. Manny, of course, this is all happening against a backdrop of rising political tensions in Manila, in the Philippines, between the two sides, Marcos and Duterte. Talk us through of the risks for the country.
So basically, yes, as you said, Haslinda. So basically, this last month, this arrest of the former leader happens just over a month after his daughter, the vice president, was impeached by the House of Representatives, mainly thanks to the President Marcos's allies there. So the risks is that this is a really no turning point for the team, for the Marcos Duterte alliance that won the 22 elections by landslide.
Manny, thank you so much for that. Bloomberg's Manila Bureau Chief Manolo Serapio. And of course, we're counting down to those tariffs on steel and aluminum coming up really shortly. But we have benchmarks in Asia looking like this. MSCI up by about 0.1%. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.